Indian Prime Minister Narendra Modi faces a tougher challenge than ever in convincing U.S. President Donald Trump and American investors that India remains an attractive destination for investment. Unlike Modi's previous U.S. visits, where he showcased India's booming economy, soaring stock markets, and China rivaling potential, this time, the narrative is far less optimistic. Since September, foreign investors have withdrawn $21 billion from Indian stocks, the rupee has hit record lows, and India's stock market has underperformed compared to other major Asian economies. These factors, coupled with Trump's threats of reciprocal tariffs, have made Modi's task far more complex. A critical time for Indian markets. According to Vikas Prasad, a portfolio manager at M&G Investments Singapore, Modi's visit to Washington comes at a pivotal moment for India's economy. While India has traditionally been insulated from global trade tensions, concerns about new tariff regulations under the Trump administration are shaking investor confidence. Clarity on tariff directions could help ease uncertainty and bring stability to India's financial markets. The urgency to revive investor interest in India has never been greater. While China continues to strengthen its dominance in technology and manufacturing, North Asian markets have become more attractive to U.S. funds. Meanwhile, India's economic growth is projected to be the weakest since the pandemic, and its stock market is still one of the most expensive among Asian emerging markets, despite a recent correction. Rupee and markets under pressure. Once among the best-performing currencies in Asia, the Indian rupee has struggled this year, slipping to one of the worst-performing currencies in the region. Foreign outflows from Indian equity markets have only made things worse, putting additional strain on market stability. However, Modi still has strong points to showcase. India remains the fastest-growing large economy in the world, with an expanding middle class and a rising base of wealthy consumers. To stimulate growth, the government has introduced record personal income tax cuts aimed at boosting spending. Additionally, the Modi administration has pledged $11.128 billion in infrastructure spending for fiscal 2026 to enhance connectivity, urban development, and logistics. Despite these efforts, Yin Hui, a global market strategist at Morgan Asset Management, warns that India's economic outlook is weaker than originally expected. While near-term prospects are improving, he emphasized that India still remains a promising destination for investment, despite the current loss in momentum. The impact of Trump's trade policies. One of Modi's biggest challenges will be to secure exemptions from U.S. tariffs that threaten India's trade interests. If Trump enforces higher tariffs on Indian exports, it could further dampen investor sentiment and increase business costs for Indian companies. The corporate earnings outlook remains concerning. The NSE Nifty 50 companies have seen profit downgrades for 2 consecutive quarters, with more declines expected if U.S. trade policies increase import costs for businesses in India. According to Kunjal Gala, head of global emerging markets at Federated Hermes Limited, Modi's U.S. visit will only be meaningful if it results in clear assurance from Trump that India will not be targeted with additional import tariffs. Without such clarity, the trip's impact on investor confidence will be limited. What's at stake for India? As Modi meets Trump and U.S. business leaders, expectations are higher than ever. India's ability to attract foreign investment, navigate global trade uncertainties, and maintain its economic momentum depends heavily on the outcomes of these discussions. For Modi, this visit is more than just a diplomatic engagement. It is a battle to restore investor confidence in India, a fight to protect India's trade interests, and an opportunity to secure a more stable economic future amid global uncertainties.